Good afternoon, everyone. It's Monday, the 16th of September. Welcome to another edition of Monday Market Picks. My name is Silan Wickramasinghe. I'm the head of research for Maybank Securities here in Singapore. We've got a very busy week ahead, starting tomorrow, watching for the Fed meeting, Fed meeting starting, with the potential for the first Fed rate cut happening. Will this be 25 basis points or will this be a big bazooka, 50 basis points? That's something to watch out for. But we start the week with some very weaker than expected data coming out from China. And we have, that's where we're going to start our show today with our China economist Erica coming on stream to talk to us about what this actually means for the wider economy. Then after that, we are going into ASEAN, where we are starting to see some corporate activity picking up, especially in the offshore and marine space. We got Jarek to talk about the latest offer for Dyna-Mac and what to do with that offer. Staying with Jarek, we're going to turn our attention to CSE, which has been hit with an $8 million settlement. What does that mean? And does that mean we are becoming less bullish on the stock? Jarek will explain. We also have Husseini, who's going to be joining us to talk us through the exit of Gojek from Vietnam and what that implicates for the rest of the internet sector in ASEAN. And then finally, we got a fresh initiation on Indonesian healthcare. So stay till the end to find out what our top picks are. So before I bring our first speaker in, I want to remind you of our new Telegram channel. If you haven't subscribed to this, please do scan the QR code that's going to appear on the screen right now. And you can get the latest and the freshest perspectives every day from our Maybank Securities Telegram channel. So do join us there. Now, let's bring on Erica. Erica, welcome to the show. China's August numbers came in weaker than expected. Can you highlight what actually disappointed?
Hey, Dylan, thanks for having me on the show. Indeed, China's economy in August seemed to have slowed down more than expected. So earlier this year, everyone thought that manufacturing was going to take over from consumer revenge spending as the main growth driver for China. But so far, that doesn't seem to be working out. So with a lot of policy support being directed towards manufacturing, actually, China ended up producing too much. And with domestic demand still weak, inventories have been piling up. So inventories have reached an all-time high and are accelerating and causing producer price deflation. So there's three areas of weakness in the economy. On the production side, on the consumption side, and in investment. So on the production side, industrial production grew at 4.5%, much weaker than the 5+% that we are used to seeing. Services sector activity also slowed. And on the consumption front, retail sales were surprisingly weak at just 2.1%, with a lot of discretionary spending actually contracting. So spending on cosmetics, jewelry, clothing, and footwear have all fallen. And this is not surprising if you look at the jobless rate. So the jobless rate that was announced on Saturday actually rose to 5.3%. So you see the human cost of this slowdown becoming more apparent. And finally, investment has slowed down to just 3.4% from 3.6% in July. And particularly weak are private sector investment that has been slowing down and actually fell 0.2% in the first 8 months. And foreign funded investments have fallen 18%. So doesn't give a very encouraging picture, Tellen.
Yeah, not very encouraging at all, Erica. And now I also note that house prices have actually fallen the sharpest in 9 years. Can you put that into context for us as to how weak that is? And I remember there was a property rescue plan by the local governments announced recently. Has that had any impact at all?
The property sector downturn has been going on for 3 years now. And what is worrying is that it looks to be worsening instead of tapering. The prices of new homes fell by 5.7%. And you're right, it is the biggest plunge in 9 years. And then the prices of used homes, so secondary market prices, fell by 8.6%. So it is the sharpest monthly drop on record. And on month-on-month terms, the decline in both categories seem to be picking up. The government has, in May, actually rolled out a 300 billion yuan rescue plan for the state to buy up some of the unsold housing inventory and to convert them into affordable, low-cost housing. But so far, the plan has not actually taken off. So of the 300 billion, about 4% of the funds have been used. So we think that something more bold might need to be rolled out.
Right. So that's the thing, Erica. So what does all of this actually mean to your 2024 GDP forecast? And what can the Chinese government do to bring back growth?
So we have recently downgraded our 2024 GDP forecast to 4.8 from 5.0%. And then next year as well, we have downgraded from 4.5 to 4.3%. And I think there seems to be further downside risks to that scenario because I think, even if the government does step on the gas right now, it will take about 3 to 4 months before those more dramatic support policies actually get implemented. And at the moment, it doesn't seem to be the case. So I think the leadership seems to still be quite committed to staying the course and gently steadying the economy, deflating the property bubble gently, instead of doing anything more dramatic. But I think now is probably the time to do something bolder to forestall a more severe deflationary spiral, Dylan.
That's right. So, Erica, I actually have a question from the audience today. What are the potential long-term implications of a prolonged slowdown in the China economy for Singapore? That's from John Tan. And he's also asking stock market implications, which I can take after your thoughts, Erica.
So I think China being the largest economy in this part of the world and the second largest economy in the world, I think that has implications for not just Singapore but for Southeast Asia as well. So China has been a major source of demand for services and goods, and you can see Chinese consumers are actually a big driver of tourism in Southeast Asia. So I think long-term slowdown in China's growth will actually limit the growth prospects of Southeast Asia and for Singapore as well.
Thanks, Erica. So part of, I think, from an equity market point of view, some of the key areas that we'll be watching out for, as Erica said, is a prolonged slowdown in China will have an impact in areas like tourism coming into Singapore as well. So names like Genting and some of the hospitality REITs will be affected by that. Also, if you look at some of the exports that are going into China from Singapore, some of the tech manufacturers might see some impact as well. One of the direct impacts might actually be for Wilmar, which directly serves the Chinese consumer, and that's more than 50% of their revenue. So that's another name to look at. and also some of the Sing banks, particularly DBS and OCBC, which depend on about a third of their asset book in North Asia. So that's also another area to watch out for. So thanks, John, for that question, and thanks, Erica, for joining us.
Thank you.
Now let's move on to Jarek. Jarek, Dyna-Mac has been an opportunity plus stock that you've been banging the table since the beginning of this year when the stock was around 20 cents. Now they've received a cash offer from Hanwha Ocean for 60 cents. But you are telling investors to hold on and wait and see. What's driving this opinion?
I think for me, there's a few reasons. Maybe I think if you look at for Hanwha's sake, right, basically they're already about 25% of the company. They failed previously in April with a bid to take over Austal from Australia, and now they have a 25% stake in Dyna-Mac, but a 25% stake is not a controlling stake. So I think, for them, it's very crucial for them to have a controlling stake. If not, then it defeats the purpose, even with them having 25%. So we believe that, this offer, as they did mention, that it's not a final offer. So there's a good chance that, they might revise up the offer depending on the acceptance rate, right? So for them to cross 51%, they might come up with a higher offer. So that's why I think. And so if you look at valuations wise, they are trading at about 11 times, about 10 to 11 times this year, and then forward about maybe 8 to 9 times. So valuations are also not rich either in this upcycle. So there's actually, I think we believe that there's actually room for Hanwha to increase their offer to higher or rather close to our target price. And since it's not the final offer, it's actually worth it for investors to actually wait and see for a better offer. There's no downside to it. Yeah.
Got it. So just be a bit more patient. That's the key message here. Now, Jarek, since I have you here, I want to shift gears to CSE. They were hit with an $8 million settlement for their Hunkin unit in the US. So my first question is, how worried should we be on more settlements like this for CSE?
Okay, so this project actually occurred during COVID-19. So there was a lot of, during COVID-19, there was a lot of delays in terms of equipment deliveries, and also the people on the ground were faced with a lot of restrictions on whether they can leave home, go to the site, and so on, things like this. So in 2023, they also had a cost project overrun because of COVID, and they actually implemented certain measures already to sort of reduce all these risks of it happening. So this project that actually when this project actually got a settlement was also happened during COVID, before they implemented all these better processes and controls. So I think that I mean, in a business sense of things, this is a key risk of executing projects that might happen, for business like them. But we do believe that going forward with the measures they already implemented, and now they are also getting their lawyers again to look at every contract to make sure that they are more watertight to prevent such situation from happening again as well. So we do believe that management is taking quite a lot of measures to prevent this from happening again. But saying that it will never happen again would be quite wrong to say that. I mean, there's always a risk, but I would say the probability of it happening again is quite low, and it may also be due to just the COVID-19 disruptions that disrupted a lot of business models. And we do think that without such big disruptions, the risk of this happening again should actually be quite on the low end.
Got it. Now you've actually downgraded earnings quite a bit, 17 to 27% for 2024 to 2025, and you also lowered the target price to 60 cents from 64 cents. But you are still keeping your buy recommendation on this stock. So is this still an opportunity plus stock, and why?
Yes, actually, we still remain quite this is still quite a conviction pick. Basically, I think the lower rate of earnings can't be helped because they got a $8 million USD settlement, so that's about 10.5 million Sing, which is about close to about 21% to 30% of our FY24 estimates. And then we also have to adjust it a bit lower next year to factor in for some I will say, to make the earnings more sustainable in terms of for the growth. Right, so but if you look at it in a way, we are still projecting growth of about close to 20+% next year and the year after. And I think that, from our site visit, when we come back from the US from our site visit previously in the last few weeks, basically we do remain quite upbeat on what's going down on the scenes in the US in terms of electrification growth, data center growth, your EV growth, your infrastructure growth. On that front, we think that the growth is still intact. And also, we also do think that, the settlement arrives so quickly for this issue is because management wants to focus their efforts and also on the growth going forward. So we do think that this is actually just a one-off hit to the net profit. And also next year, they should resume back to normal and on high growth phase. And also, we do think that the dividends can also be sustained. So that's why we still remain committed because of these reasons.
Got it. Thanks, Jarek. So as Jarek said, there's quite a few positive catalysts still out there. He has spent quite a bit of time in the US, and you can read that in his report that came out last week as well, with a lot of photos and things like that on what he saw in the US. And there, the demand cycle is very, very strong for CSC. While you can never say never with legal settlements like this, there's still quite a lot of growth to be had, especially in the data center theme for CSC. Now, let's bring in Hussaini, who's joining us. Hussaini, let's see whether he's on the Hussaini is there. Okay. Hussaini, so I want to talk about ASEAN Internet. Activity seems to be picking up quite a bit in the sector lately. Gojek exiting Vietnam is the latest. Now, let's start with that. Is that the right move for them?
Sure. Thanks, Dylan, for having me. Yes, we see it as a positive for GoTo, which is parent of Gojek. See, Vietnam is a crowded space, including Gojek. There are 4 ride-hailing operators in Vietnam right now. Gojek was the smallest with just 7% market share. Now, competition is also elevated. So to put in perspective, 1-year-old ride-hailing operator named GSM has already taken 20% market share in the just last 1 year. So competition remains very elevated. Gojek in Vietnam is likely loss-making as well. So net prospects for Gojek in Vietnam is bleak, and thus exiting a sub-scale market helps to reduce losses and allows them to concentrate on or focus on their home market, which is Indonesia, and which is a much bigger pie. So net positive. It is also slightly positive for Grab as well, which is the largest operator in Vietnam.
Yeah, so that's what I wanted to ask you actually, but more from a Singapore perspective. Is there a potential that Gojek can exit Singapore as well? And if they do, what's the overall impact to Grab from that?
Yeah, that's an interesting question. Now, we don't have any insights on whether they will exit, means Gojek will exit Singapore or not. But it's a recent divestment, means GoTo, their parents' recent divestment of e-commerce business in Indonesia, and now them exiting Vietnam does raise this question of Singapore exit as well. We estimate Gojek has around 17% market share in Singapore, so it's a decent market share, but it still remains loss-making. So we had done this analysis in the report that if they exit Singapore, if they exit Singapore and assuming that the market share is proportionately divided between the remaining operators, i.e. Grab and Tada, then it will be around 2% GMV accretive for Grab and around 6% EBITDA accretion for Grab. So net a positive development for Grab if Gojek exits Singapore.
Got it. And very quickly, what's your pecking order for your ASEAN Internet names?
See, C Limited remains our key pick in ASEAN Internet space. We think all of its businesses are moving into right direction. E-commerce is in a very, very good shape in ASEAN. All the operators recently has increased seller take rates, and Sea Limited on the back of their logistics remain in a very, very strong position. Their gaming business is also doing good. Followed by C, we like GoTo for its valuation. Grab finally remains a non-consensus hold. Gojek exiting say, Vietnam and potentially Singapore is all positive, but at the same time there are headwinds as well, which includes entry of GSM in Vietnam as well as in Indonesia. So in our report we have discussed that GSM in Indonesia is all ready to go in, so that creates some headwinds for Grab. Also, TikTok is moving into their space in local services space, so that also remains a headwind for Grab.
Got it. Thanks, Hussaini. Thanks for joining us.
Thank you.
Now, we're very tight on time, but I do want to highlight a brand new report by analyst in Indonesia, Paulina Margarita. She's initiated on the Indonesian healthcare sector, and she's very, very optimistic. She has a positive outlook on the sector with buy recommendations on Medical Loka Hermina, Mitra Keldruga, and Silom International. She's bullish on the vast growth the Indonesian healthcare infrastructure, healthcare sector can provide, given the massive under-penetration in the current Indonesian healthcare sector, as well as the infrastructure there remains fairly insufficient to meet the growing demands of the Indonesian population. And there's also a shortage of specialists as well as hospital beds as well, especially when you compare with other emerging markets. There is also positive tailwinds from healthcare laws that are being reformed right now, with focus on increasing specialists, accepting more foreign doctors, and streamlining the licensing processes as well. So overall, we're actually expecting a very strong earnings growth for the sector from pricing power coming back, as well as margin improvements as well. Our top picks are Heal, which is Medic Kaloka from a higher patient volume from universal healthcare coverage, as well as higher margins as well. But we've got buys on all the other names as well. So do have a look at her very comprehensive research report in our newsletter today. With that, we are out of time. So let's have a quick look at upcoming announcements. Obviously, the US FOMC meeting details will be out on the 19th. Singapore's Nordex numbers coming out on the 18th, which is today. Sorry, which is 2 days from now. We've got the inflation rate coming out on the 25th of September, and industrial production for Singapore coming out on the 26th of September. So do watch out for that. In terms of events, just want to give you another reminder of our special StarHub Investor Evening, which will be on the 25th of September. Very limited spaces, so please sign up today. We also have a Maybank and Bloomberg joint seminar on investing in Vietnam as well. Do speak to your salesperson if you'd like to get a slot there. With that, unfortunately, we are out of time. Thank you so much for joining us, and for all of you joining the Formula One weekend, enjoy the races, and we'll see you next Monday, and have a profitable trading week.